Good evening, everybody. I drew a couple trend lines on here. That's why the 50-day moving average was relatively important. So this is the visual confirmation of why the candlestick formations are much more important than what the numeric numbers are. The Dow was up 100 or up 88 points today, but as you can see, it was indecisive after they opened it, and we came back down into the kind of the trading range. Still have this wedge formation, but showing there was some decisiveness early in the day and then ended up indecisive at the end of the day. So even though the market is up, it's not up with anything that we would say is a rip-roaring, say, confirmation that bulls are in control. What did I just do here? Now, the NASDAQ was a little bit more compelling because we can see this kind of little slow curve here and a kicker type signal. We were pushing on the breakout area, but it pulled back a little bit. So the only reason that we would look at this and say this is a good bullish chart, except look at what the nature of the market has been for the last few months. Just up and down, up and down, up and down. So there's nothing to tell us that tomorrow they open this down big and bring it back to the T-line, which still puts us in this sideways mode. So a lot of the strength today came from, I think I can type like a banshee and I can't hit. This is crude oil. Still acting strong. Crude oil closed right around the 51, closed right around the 51.80 level today, up from the $45 level where it bounced off the 200. But this is okay then. We'll take that into an account. Hit the button early. Well, we also want to take a look at what price patterns usually do. Once again, look at the wedge formation that had been forming here in the in crude oil prices. This is why I want to say when it's in a wedge formation, you probably don't really want to pay attention to anything until they break out through the wedge. And when they do break out through that wedge or this sideways motion, usually the new enthusiasm is going to create that next price move with a good solid gain to it. This is over on the gold chart. When it broke this wedge formation, I can draw the lines here. And it broke this formation. Notice we were going to get slammed a little bit. And notice what happened right as it broke that formation. They slammed it big time. I told you that everybody else that was watching this trading channel, when they saw it wasn't holding, they were all getting out at the same time. Does the pattern suggest that an option might be appropriate here with bullish engulfing on the oil charts? Well, you could. Yeah, that's the whole point of this analysis. Remember, you also have to be careful. Remember, if you see a bearish engulfing signal in the oversold area or a bullish engulfing in the overbought area, that's usually the last gasp buying. Start watching for some profit taking. So remember, this all comes back to that relevant factor that you want to see buy signals when you're closer to the oversold area. A buy signal in the overbought area doesn't mean all that much. And a big bullish engulfing in the overbought area tells you start watching for profit taking. Oops. Let's see. This is why the trend is always kind of a number one factor of what you should be looking at. If we can see that this has always been kind of a downtrend, this is live cattle. But anytime we get to a resistance level or a potential resistance level, in this case the T-line, I want to be a little bit more diligent to see where we might be heading to. In this case, when they fail the T-line, where do you think we might be heading to? Probably back here to the this lower trend channel. So this is, again, is nothing more than visually saying, all right, which way is the overall market and what's happening once we get to resistance levels. So if you can analyze that you're in a downtrend, and every time you come up to the top of that resistance level or any resistance level and you're seeing sell signals, you pretty much assume that the downward pressure is still in progress. On the other hand, skip over to a stock chart, if you can see that you're in an uptrend, the more you can see that the buying is going on or buy patterns are going on in the trend, the higher the probability that that trend is still in progress. This is Apple Computer. So we can see that it's been bouncing off the 50. Now we can see we have a fry pan bottom with a best friend signal breakout potential right here. That kind of implies that we could be going to the top of the trend channel up here and around the 122 area. So just, again, this is just kind of visual common sense analysis. Which way is the overall trend going? Is it an uptrend that they're buying on the dips, or is it a downtrend that they're selling on the peaks? So let's see, what else do we have over in the... So here's one that we're keeping an eye on. What type of pattern do we see setting up in soybeans? Got kind of this little wedge formation. So we want to see which way they're going to break it out from here. Also, notice the wedge, what's happening to the stochastics. Somebody in the options room today was saying, well, should we be ready to buy soybeans? Well, you can see that there's a wedge formation and it's not really going anywhere. No, you don't buy it because you don't know how long it's going to keep bobbing. This is, oops, hang on. So here's, again, why the patterns can be a little bit more enhanced using candlestick signals. Notice we got kind of a head and shoulders. And over here on the right shoulder, notice what happened when he hit the 50, a bearish engulfing signal. Where do you think the next likely target is? Possibly down here to the 200-day moving average. So again, this is just taking into consideration what signals you're seeing at support and resistance levels, and which way is the trend apparently trying to move or visually going to be analyzed to be moving. And see, the only other one that would be of any great significance is we can see that the dollar, same scenario, up, lower or higher low, not quite a higher high, but a higher low. Now we're heading for a higher high. So obviously this is one that you can trade based on, it's in an uptrend, you buy it on pullbacks. Okay. I went through the charts of all the charts that look good and the charts that we're in that look good. And I guess this is just kind of the natural evolution. most of the charts that look good are the ones that we're already kind of trading. We saw in EBS that we were in a fry pan bottom. We had the breakout and had the kicker signal on the breakout, giving us the implication that there is still a strong uptrend, making the 200 still the likely target, which would coincide with right about that same level as it topped out before. So I kind of showed these. What was the other one that had a kicker signal? Beat. Anytime you see that kicker signal, you can expect a 45-degree off of here. So whether you're trading stock or options, if you can pick out, again, if you have your portfolio set at 10 positions, you pick up these positions where the high probability trades, they might not be very exciting every day, but the likelihood of them moving in the right direction are extremely high. DXPE was a very simple analysis of this downtrend being breached. And notice where it was being breached, right here at the T-line. And then a pop that pretty much told us that this downtrend is over. This uptrend is in progress. So again, these are just very simple, high probability trade setups that if you've got, once again, 10 positions on and you've got 6 of them that are just nice steady patterns, that means you really only have to pay attention to the other 4 that might be moving around quite a bit more because they don't have as distinct a pattern to be recognizing. LXRX, the pattern is very obvious. Left-right combo after a series of dojis. Bullish confirmation. Now, if I'm going to go over here, that's not what I wanted to do. So this is why sometimes it's better to have a couple of chart. The Wharton Brothers chart shows that this opened here and immediately moved up, whereas this one shows that it opened higher. In either case, you can see what the pattern is, that J-hook pattern in progress. So there's 2 advantages to trading the patterns. 3 advantages for trading the patterns. 1, it can be pretty well confirmed to know which direction you're moving based upon the signals telling you that it's moving in the right direction, where you can see the pattern. 2, when you can see the pattern setting up, it doesn't matter as much what the overall market is doing, because usually a pattern setting up, if the market turns on you, the pattern is usually going to have a little bit more time to get out of the trade before turning it over than a non-pattern. And 3, a pattern, once it gets moving, is not going to have a steady move, but usually a more substantial move because of the pattern. How does Wharton Brothers show it? It shows that it actually opened right here. And again, this is all based on the feeds that come into these chart services, where the first tick is showed on the chart. Now, the problem with some of these chart services is they could be hitting a tick just 30 or 3 seconds pre-market. So it's hard to tell why some say feeds are a little bit different than others. But again, based on a chart pattern, doesn't matter where it actually opened, it's still showing us what pattern we're setting up. ARRS, these are the type of patterns or signals that you want to be conscious of, as in, you can see you're in a slow uptrend. You can see where the kicker signal occurred right off the 50. You can see where it is right now. But we also know what would happen if it opened positive tomorrow. we had a doji sandwich that closed up here. That definitely broke through this level, telling us there's a lot more upside. So the reason I'm going through a lot of the charts that we've already are involved with is because most of the charts that we're involved with are still the best looking ones out there on the market. I've got a few more that look good, but right now we want to analyze why we're in some of these charts and get your eyes accustomed to recognizing the pattern. Notice the fry pan bottom type pattern. Notice the doji sandwich. Notice the T-line crunch. So all we can do on this pattern is, again, that very simple rule that we just stay long until we see a close below the T-line. We recommended fold today. Didn't do too much, but look at the evidence that it provided for us as far as a additional visual evidence. Notice where it consolidated to, right smack dab to the T-line and back up again. So what would we recognize if it opened positive tomorrow? That we'd have a doji sandwich and it'd be confirming our J-hook pattern. CC2000, if there is no trade in the first minute, the space is filled with the previous close value. Thus the candle starts at the old close rather than the actual open. I don't know. Yeah. Again, that's all based again on the feed that I forget where TC2000 gets their feed. Now on this chart, this is CQG, and since CQG is kind of the grandfather of all the charting services, most of them, or I say most of them, a good number of them get their feed from CQG. So, anyways, what else are we looking for? ETC, big fry pan bottom, just stay long as it stays above the T line. Same thing with Nordstrom's. However, here's a good analytical view of why we want to see what the pattern and the signals tell us. When it got up here pretty much to the breakout area, we've got a bearish engulfing signal when we should have seen a breakout. That tells us if they open this lower tomorrow that we haven't broken out, that maybe you're going to be in a cup and handle, but if it opened lower, probably want to take profits and just wait for the next buy signal. So because we know what the pattern should be doing at the breakout areas, we also have the individual signals telling us what's actually happening at those breakout areas, just like what is actually happening when it hits a support or resistance level. We can see exactly what should be happening. We recommended Worthington because here's kind of our fry pan bottom that failed. Then it did kind of a scoop pattern. So the slingshot effect is in this direction. And notice what happened right here, what the rationale is on a positive open today. It's breaking this level, telling us we've got wave 1, wave 2, now gapping up into wave 3. Where would be our sell stop? Well, we probably wouldn't want to see it come back down into this range. If it did, that would pretty much tell us that this breakout is not in progress. Get back out of the trade. FTI is one of these that did that same breakout scenario. Right in here, you can see you got kind of a resistance level, and they gap through it. This is, again, kind of that nice, steady, strong move after a breakout. So I'm showing these situations because there are dozens of good trade setups when it comes to candlestick analysis. But a lot of people say, when there's so many good trades, how do we take or capture them all, or how do we evaluate them all? You don't have to. If you get accustomed to maybe seeing this type of move, maybe you only trade 2 or 3 different patterns. That if you had this type of move, I forgot what the other, anything that's shown that they've broken out, or even broken out through this little mild downturn, creating this pattern, you might just trade 2 or 3 different patterns and not worry about all the rest of them. Again, here's a situation where we were in a breakout mode, but notice what we had occurring right here at the breakout area. Kind of a belt hold. Makes this very simple. If they open this lower tomorrow and you are long, you close it out, because what's that telling us about this level? But now you've got a double top instead of a breakout. More than likely, they're coming back to test the T-line. I say more than likely. There's no sense that if we know this is selling, and that if it opened lower, that it's failing this level, why take the risk? We know where the probabilities are taking us. Close it out. The worst case scenario is even if they waffle it around and start back up, you can always buy back. But this right now is telling you they couldn't break out of this level. Get ready to take some profits. MX, you can see what's happening here. There's that fry pan bottom. There's that little Morningstar signal. I still wouldn't be afraid to be buying this one on positive trading, pushing up to this resistance level. If it breaks through there, where's your next target? Somewhere up here, kind of in what the trajectory was prior to this consolidation. REN, I got this one out of space, out of place. A lot of the oil stocks are just acting well. REN, as you can see, has been acting well for quite a while, moving up, staying above the T-line. We did Apple, some of the other biggies like Netflix. Came back and just tested the T-line, which means you can look for the J-hook pattern on a positive open tomorrow. Or Amazon is still trading up. Darn. Yeah, I don't have the 3T line over here. Still trading just above the 3T line, but it's getting a little bit toppy. So you get ready to take profits if you start seeing some weakness. Kind of the same scenario over here where it was getting a little bit toppy, but the one thing it didn't do was close below the T-line. So the other day we took off half the position because it was getting a little bit iffy. If it continued higher, all right, we were still in half the position after a good profit. But looks like it's still in an uptrend at this point. Momo was one that we had some questions on. Question was, got stopped out, then got back in, got stopped out again. Should I get back in? Well, the answer is, what's the overall chart telling you? So there's a lot of times where I'll get whipsawed or I'll get stopped out, I get in, then it backs off, it gets stopped out. Then I have to look at what the chart is telling me, that the buyers are still there. All right, so I gave up some of my profitability, but I'm still looking for a chart that's telling me that we're heading in the right direction. That was Momo. AGIO, as you can see, wave 1, wave 2. If you closed out here, you can buy back on positive trading, breaking out through this level. If you held on to it, the criteria would be it had to open higher and trade higher to stay in it. Had it, whoops, where did we go? Had this opened down here today, definitely would have closed out the whole position. Oh, the oils, because of oil prices, Whiting still looks like something to pay attention to. Chesapeake really didn't do all that much other than tell you that it's staying up above the 50. You want a doji today, a doji harami, which means if it opens positive tomorrow, you can still consider buying it, especially if they get back up through the T-line. MPET, that one's more compelling, coming out of the slow curve and staying above the T-line, and you're right about the breakout area, which means if they break it out, you could have another big move like this. On PBR, the only worry I would have is where is it compared to the trend? So you don't have too much more upside before you hit a major resistance level. So obviously it was better to buy right in here when it gapped out through this level. So if you are buying, you have to be very conscious of where it's heading to. Hold on to your individual ones until we get done with the ones that we want to take a look at here. Atwood, notice how the 200 is telling us it's not acting as resistance. Your T-line is still pushing everything up. And CRK, another slow curve, fry pan bottom, where you can be buying on positive trading, obviously watching to see what happens once we get up here. But you can see how things are building back up. CC needed to stay up above the T-line today. This one, if you close it out, you could buy it back on positive trading. If you didn't close it out, and kind of the rationale would be that if you didn't close it out, it was on the basis that notice what it's done over the last 2 months. Pretty much use the T-line as a support level. Now you have to kind of calculate, is wave 1 and wave 3 about the same? This would calculate this. So it's 10 to 14, 4 points. 14 to, not quite the 18 area. So makes it very simple. If it opened lower tomorrow, I'd close it out or wait for the next buy signal. Or, on the other hand, it has to open positive tomorrow to stay in it. That was CC. BVX we're putting up here because this had the same analysis. But it closed right on the T-line on Friday on a pullback, which meant what did we need to see today to stay in it? It needed to open positive and trade positive. The fact that it opened lower and started trading lower would have had me close out the position. Now, looking at it, you can always buy it back on positive trading, telling you they've brought it back up above the T-line. But why risk it? If it opens below, you close it out and then wait to see when it comes back up. Because for all we know, it might not come back up until it comes back down here and tests the 50-day moving average. One very simple rule about the T-line. When it closes below the T-line, the probabilities of it heading down are much greater than it heading up. So take that probability factor and put it to your advantage. There's nothing wrong with coming out of a trade and buying it back when the trade reconfirms that it's heading in the direction that you think it's heading. Yard, nothing wrong here. You can see the fry pan bottom. You can see the bobble. All you have to do here is stay long as it stays above the T-line. Okay, most of these are in portfolios, or we've been discussing them, especially in the chat room during the day. A lot of them have the probabilities heading in your favor. So there are trades that just work out nicely because you can see the pattern and you can see the stimulus for getting into that breakout mode like a kicker signal. RGNX, you can see a nice J hook, but then again, where's our resistance level? Right here. So this is things that you have to calculate. Now we do have a doji sandwich, we do have a J hook. We do have the potential of it hitting this resistance level. Let's draw that line. So that makes it easy. If it comes up here and hits that line, you watch diligently to see whether it goes through or whether it fails at that level. Here's one that's probably going to be seen on the recommended list tomorrow. ARIA. You can see the pattern setup, a J-hook pattern. And how did this J-hook pattern get started? With a doji gap up, your best friend. And we're right here at the resistance level. Makes this very simple. If it opens positive, you want to be buying immediately because that tells you the J-hook pattern's in progress. Blue, same scenario. You can see the J-hook pattern setting up. They can't close it below the T-line. If it opens positive and breaks through here, wave 1 and wave 3 should be approximately the same. EKSO, all you can do is stay long on this one. Anytime you see that doji best friend, I had this backwards. That doji gap up tells you there's a strong move. Which one were we looking at? That doji gap up tells you there's going to be another strong move. In this case, we can see what type of pattern it would be performing, J-hook. Now on the short side, we got that doji gap down in Polaris. Now it's been acting well or too well, but notice what it did today. Even with the market, everything else trading up, it traded up a little bit, but way back at the lower end of the trading range and right at the T-line. Makes this very simple. If it opens positive tomorrow, you close out your short position. If it opens lower, this is still in effect because your stochastics aren't anywhere near the oversold area yet. And Visto, another one that opened positive, traded positive today, ended up 32 cents today. But this is, again, the benefit of the graphics of candlesticks. What did it do based upon where it opened? It closed 3 pennies below where it opened. I'm telling you, there wasn't very much strength here. You can still be shorting this one. Blue. It doesn't really matter. If this is gone from 50 to 75, 25 bucks, anywhere in here, 25 bucks takes you up into about the $97 range or 100. Doesn't really matter. We know that approximately this move here and this move here is going to be the same. So I don't have a concise entry that tells you wave 3 is the beginning. Just somewhere in here tells me if it breaks out, we've got the potential of another 25-point move or getting pretty close to 100. And that starts kicking in some of the other trading rules that you want to know about a price move. Like when a stock hits 90, more than likely it will go to 100, just a round number. And we went short Cray because it's been having a very hard time getting up through the 50-day moving average. Notice what's happening here, kind of a dumpling top. They could start breaking this down pretty hard like they did over here. ACIA. Notice the little island reversal, and where did this island reversal occur? Again, just visually recognizing, and right along in here was a resistance level. Now they've gapped it down. There could possibly be another equal trend channel here. So if they open this lower, breaking this trend channel, where's your next target? Right down here someplace, filling those gaps down here. Jason, yes. And so from what it looked like, I'm hesitating because I think our friend the skunk is out back. That good summer aroma. Yeah, I don't know what the time frame is here. This is August, September, October. This is 1st of August. 1 month, 2 months. I guess getting toward the end of this month would be the next earnings. And so it'd be about the November, first week of November. MFS. So looking at this one, because notice the big evening star signal, and where did this all fail? Right here at the 200. Where's our next likely target? At least down to this level. And then possibly if it breaks that level, you got a wave 3 to the downside. Oops, I know this one was stuck in the middle here. INOV. Just steady weakness. Every time it comes up to the T line, they sell it off. And we're right here at kind of the breakdown level. But if this gaps down or it breaks down, you could have another big 4.5 point move to the downside. I think this is supposed to be in between. Oh, there's that evening star signal. Notice where we closed, just below the support level, making the impression that this is wave 1. Wave 3 could be still substantial to the downside. And T2, another just kind of visual analysis that if this was your support trend and they broke it, now we're sitting on another support level. But if they start trading this one lower, where's their next target? Could be all the way down to the 200. So there's going to be stocks that head up, stocks that head down. We're trying to look for the ones that have the setup for a possible strong force move to the downside so we can take advantage of that. Earnings, okay, thank you, on October 27th. All right. Okay. So anyways, what we have to contend with right now is it looks like there's a slow curve in the Dow, but we still have to break this kind of investor sentiment trend where it's up one day, down the next day, up one day, down, down, up. It's just indecisive. So we can't readily say, oops, we've broken out, we're heading up, because we really haven't broken out yet. And even though the NASDAQ has a nice looking chart that could get ready for a break to the upside, it's also got up, down, up, down. For all we know, we can wake up tomorrow and the pre-market futures are down big again, and we're right back in the sideways mode. Okay, so that's about all I got tonight. Again, most of the good-looking charts right now we're already participating in, which is kind of a function of being able to analyze using simple candlestick scans which charts to have the highest probabilities. Oh, I didn't do CRVP. Why did I skip that one? It backed off a little bit today, but not anything telling us that this best friend signal isn't still keeping us in progress. Right now, I would stay long. I'd still use the T-line. While the T-line is going to be up here somewhere, I'd still use the T-line as a stop. But you can see the classic pattern, which is a big fry pan bottom breakout J-hook pattern. Is that a contrarian danger signal? That's not much is looking good except the few that we already have. Not necessarily. No, it's not a danger signal. It's just telling you we can identify which charts look good even when your market looks like this. So if the market looked like this, we might have another 40 or 50 good-looking charts. But because the market is looking like this all summer and now through September and October, that just means we can analyze which charts are moving when the majority of the market charts aren't. It just means that we are good. That's right, we are good. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. I see some of you jump the gun here. Yen. You stay long if you like trading this one. You're right at a breakout level, so you watch at that level. XIV, you can stay long. Still not a very exciting chart, but you can stay long on this one. MYGN for a short, yes. You can see how they did the doji gap down. That's a good looking short. Put a little. So it's already dropped 30 or 12 points. I could take it down. Ooh, much lower. Burlington. I wouldn't go short just yet. However, I would short it if it came down through today's low, which would be down below the rest of the lows. It probably isn't your best short setup, but if you shorted it, you just be a little bit more diligent on it. Lilly, stay long. Nice little J-hook pattern. Con, nice J-hook pattern. If you're buying this one, use the T-line as your stop, and the obvious is it should come back up and get through the 200. HZNP, another one that needs to get up through the 50. You can stay long ever since kind of the bullish Harami Morningstar type signal, but obviously needs to get through the 50 to really get some running room. NVIDIA just isn't doing anything of any great consequence. Right now, you shouldn't be in it. You can always buy it back if it comes back up above the T-line, but right now, there's nothing to tell you want to be in it. If you do happen to be in it, I wouldn't be going short because you're in an uptrend. Nothing real powerfully decisive. I mean, if you short it, you just watch to see what it does at the 20 and the 50. Red Hat. You can stay short on this one. Notice how this is kind of confirmation that they're selling. When they pop it up, fail at the T-line and head it back down. The Cassic's heading down. That's still a good indication the bears are in control. Baba, you can just stay long on this one. A little slow curve in progress. Willow, stay short. Failing at the T-line. Sell signal, gap down through the resistance level. That's a good looking short. Oops, and there's the first red line. Let's see, CLDX. Nothing of any great consequence here just yet. If you're long, you stay long. Simply use the T-line as your stop. And PETX, nothing of great consequence on this chart at all either. Once they broke out and then they came right back into the trading range, there's nothing there. I wouldn't be long or short this one right now until you see another strong buy signal. Venda, you can stay long on this one as long as the uptrend remains in progress. We did EBS. As long as this ticker signal still keeps you above the T-line, you stay with it. And AK Steel, that's now another one that you want to watch. If it comes up through the 50 tomorrow, basically your bobble pattern is in progress. You want to be a buyer of this one on positive trading tomorrow. RYAM, nice J-hook pattern also. That's a good looking chart. Coming out of the scoop pattern. What was the other one that came out of the scoop pattern? I can figure this one out. I know what it is. Oh, I can't. Anyways, that one, RYAM, is going to get a little notation. CDNS. There's your wedge. Let's make the wedge. That one you get ready to buy. That's another one where if it opens positive, you can just buy it expecting a uptrend, probably a 45-degree. Another one you can buy in positive trading right at the breakout level. SGY. This one's had a hard time getting out of its own way. Had a breakout. Also, you can see the wedge formation in here. So I'd be more apt to pay $12.50 for it knowing it broke out to the upside. Surgical Care, another good look at a J-hook. It's already moved from 40 to 48, making 56 your next target or your first logical target right up here. Fizz, nothing yet. If you like it, you just have to watch to see what it does at the 50. SXC, another good looking little J-hook. And where's the J-hook occurring? Right here at the resistance level. If it breaks through there, you got another 2 points to the upside. So that one you can analyze what should happen if it breaks out. Did I do this one right? AMSC. You can buy this one. Just watch what it does once it gets to the 200. Use the T-line as your stop. HDP. Another one you can buy. Wouldn't be one of my favorites, but if it opens positive above the 50 and through this level tomorrow, yeah, the next target is coming up here, hitting the 200, filling the gap. ARRS, did we do this one? This one I would suspect should have a 45-degree off of here, and possibly a doji sandwich breakout, which would give you another price move same magnitude as this one. Gaps, after its big move the other day, I would suspect a 45-degree to come off of here. Amazon is just holding above the T-line and the 3 T-line. You just stay long. Use the T-line as your stop. We did Apple. Oh, Sam, that was your uncle that had called just a few minutes ago. Apple, get ready to buy this on positive trading tomorrow. We did Amazon. XUL. Nothing of any great consequence here. If you're short, get ready to cover your short position on a positive open tomorrow because you have a bullish Harami. Stochastic's coming up. You can see it's trying to base in here right off the bottom of this trend channel. And we did BABA, right? BABA, you just stay long, steady uptrend. STX, just stay long, but it has to open positive tomorrow to stay in it, or it's lost its steam. NVIDIA, I wouldn't be backing this one yet until it starts trading positive. We did beat is another one of the kicker signals that you just stay long on this until you see a sell signal confirmed with a close below the T line. ZFGN. Bigger. Oops. Good looking chart. Big fry pan bottom. Just make sure your volume is okay on this one. We did Netflix. It's trying to do a J-hook type pattern. So you want to see positive trading from here. You definitely don't want to see it open lower. EPZM. You can buy this one. Just be conscious of what it does once it gets to the 200. It needs to do the fry pan, or I'm sorry, the bobble breakout. Oops. Fran, you can buy this one. Your next expectation is the top of the trend channel up here somewhere. But you can see how they gapped it up through the resistance level, which told you there's going to be more upside. ARRY, stay long. Don't let it even trade back below the T90. It should be moving positive from here. Nugget, still kind of lethargic. I wouldn't be, if you're short, you stay short, but I'd probably use yesterday's high as a stop. If it comes up through there, you can pretty much tell they're basing it in here. And ATEN, if you were short, you should have covered it yesterday, if not today. I wouldn't be buying it, though, until it does come back up above the T line. And FANG, nice breakout. Expect it to get back up into this trend trajectory. TJ Maxx. Nothing here to get real excited about. It's got to break this downtrending channel, which means it's got to break the 200 to get any real running room. We did gaps, Home Depot. Nothing here. I wouldn't be long or short this one. It's an institutional trader, and there's no direction to it right now. Zenga, stay long on this one. Tesoro had a big gap up today. Expect it to get back up into the 45 degree. And Seco, nice big fry pan bottom. You can be buying this one. Just be aware that it's got to break out through this level. Southwest. Nothing real exciting here. You do have kind of a big fry pan bottom setting up. You don't really have a reversal. You're just kind of staying above the T line. If you're long, you stay long. I wouldn't be a buyer, though, until it comes up through the 200. And NVCR, nothing here to get excited about. See if I can make it. Nah, still can't get excited with that one. That's a nothing stop. CRR, another one that has to open positive to stay in it. That's all I can say about this one. This one has to open positive just to stay in it. Dust, the opposite of Nugget. All you can do right now is stay long as it stays above the T line. And VIV, you should be short. If you covered your short position on a positive open today, which would probably have been the likely thing to do, thinking it was going to come up and test the 50/T line, you could always reshort it on weakness tomorrow with the idea that the slow curve and the breakdown is still taking you lower. CVRR just has not gotten going. I wouldn't be long or short this one. WNR, same scenario. It's kind of now looking like you're forming a wedge. We did Apple. Apple, you can get ready to buy this one on positive trading tomorrow. CWT, California Water, kicker type signal. Another one that I wouldn't be too excited about, except the kicker signal kind of not hitting a new low tells me they're probably going to come back up and at least test this level, which isn't that far away, but at least it'll be moving positive. And Cheesecake Factory, another one that I wouldn't be too excited if you own it or if you bought it. You just obviously have to be very diligent when it gets here to the $33 level, which isn't that far away. I'm sorry, the $53 level. My eyes are worse than my singing voice. Triple opposites. All right. The Sox. All you can do is stay long as it's staying in this trajectory above the T line. The S&P 500. I guess it's just leveraged, double leverage. Still nothing real exciting here. Probably wouldn't be trading this one at all. We did Nugget. We did STX. Merck. Merck, you can get ready to buy this one on positive trading tomorrow, putting you into the next wave. You can see the little slow curve. The doji's right here in the 50. Now the breakout. So if it opens positive, you can be buying it. AERX, stay long on this one as long as it stays above the T line. I think we did ZFGM, didn't we? Yes, you can be buying this one with the slow curve, anticipating getting up into this gap out area. An INFN, another fry pan bottom that you just stay long. If you're looking to buy, put a buy stop right up here. That's the breakout level. Once it breaks out, you're in a big running room. Could get some big upside. AMRN. If you're long, shouldn't be, but if you're long, you stay long. If you're a buyer, I'd rather pay $5 or what is this, $3.40 for it, knowing it broke out to the upside. All right, two more. Highway. Wouldn't be long or short this one. And IL. Probably wouldn't be long or short this one either. If short Bristol Myers, would you use today's high as a stop? Yes. I wouldn't want to see it come back up through there. Only because that would tell me that there's really not a lot of downside force. All right, everybody, just be careful. What we don't want to do is wake up tomorrow morning and see the pre-market futures are showing us that it's going to open down 50 points. That means we're right back into the sideways wedge. So with that, no, Sandy's back sometime later this week, but she was supposed to have been back sometime early last week. So she's still working on her deals over there. So it's just me and the cat, and right now the skunks. So with that, everybody have a good evening. We'll see you bright and early in the chat rooms.